PiNetwork's price has dropped. It is now at $1.11 according to data on March 20, 2025. This is a 4.96% decrease in the last 24 hours. Over the past week, the price has fallen by 32.59%. This decline has sparked concern among Pi's community. Many are wondering what's causing the price drop. The decline is significant. It comes after a period of relative stability. Pi's price had been hovering around the $1.50 mark for several weeks. This sudden drop has taken many investors by surprise. The drop in Pi's price is not an isolated incident. It comes amidst a broader downturn in the cryptocurrency market. Bitcoin and Ethereum, the two largest cryptocurrencies, have also experienced significant losses. This suggests that there are larger market forces at play. The recent price drop is a reminder of the volatility of the cryptocurrency market. It is important for investors to be aware of the risks involved. They should only invest what they can afford to lose. The cryptocurrency market is known for its volatility. Prices can fluctuate wildly. This is due to a number of factors. These include macroeconomic conditions, regulation, and investor sentiment. Recently, the overall crypto market has been experiencing a downturn. This has had a ripple effect on PiNetwork. Bitcoin, the leading cryptocurrency, has seen its price drop. This has negatively impacted the entire market. When Bitcoin falls, other cryptocurrencies often follow. This is because many altcoins are paired with Bitcoin for trading. The current market downturn is partly due to macroeconomic factors. Rising inflation and interest rates have made investors more risk-averse. This has led to a sell-off in risky assets including cryptocurrencies. Regulatory uncertainty is also weighing on the market. Governments around the world are grappling with how to regulate cryptocurrencies. This uncertainty is making some investors hesitant to invest. The crypto market downturn is a significant factor in Pi's recent price decline. As long as the broader market remains bearish, it is likely that Pi will continue to face downward pressure. PiNetwork's open mainnet launch has been highly anticipated. However, the launch has been plagued by delays and uncertainty. This has created anxiety among investors. The lack of a firm launch date has fueled speculation and doubt. The Pi core team has been working on the open mainnet for several years. Initially, the launch was expected in 2022. However, it has been pushed back multiple times. The team has cited the need to ensure the network's security and stability. The lack of clear communication from the Pi core team has exacerbated the situation. While they have provided updates, these have often been vague and lacking in detail. This lack of transparency has led to frustration within the Pi community. Some users have begun to question the team's commitment to the project. The uncertainty surrounding the open mainnet launch is a major factor in Pi's recent price decline. Investors are looking for concrete progress. Until there is a clear roadmap and timeline for the launch, it is likely that the price will remain volatile. PiNetwork is not listed on major cryptocurrency exchanges. This limited accessibility is a significant factor contributing to its price volatility. The absence of Pi on platforms like Binance, Coinbase, and Kraken creates several challenges. Firstly, it restricts access for potential buyers. Many cryptocurrency investors primarily use these established exchanges. The lack of a PI trading pair on these platforms means they can't easily acquire the cryptocurrency. This limits the potential demand for Pi. Secondly, it makes Pi more vulnerable to price manipulation. With trading concentrated on smaller, less regulated exchanges, large sell-offs or artificial price pumping can have a disproportionate impact. This lack of liquidity makes it riskier for larger investors to get involved. The Pi core team has stated that they are working on securing exchange listings. However, the process is complex and time-consuming. Exchanges have stringent listing requirements, including security audits, regulatory compliance, and community support. Until Pi gains wider access through listings on major exchanges, its price will likely remain susceptible to large swings. Increased accessibility will be crucial for attracting a broader investor base and stabilizing the cryptocurrency's value. Section 5, KYC Bottleneck, a roadblock to mainnet migration. KYC, or Know Your Customer, verification is a crucial step for PiNetwork users to migrate their mined Pi coins to the mainnet. However, the KYC process has encountered bottlenecks, causing delays and frustration within the community. KYC is essential for preventing fraud and ensuring compliance with anti-money laundering regulations. However, the verification process has been slow and cumbersome for many users. One of the main issues is the manual verification process. Each user's identity documents are reviewed by Pi's verification team, leading to a backlog. This manual approach struggles to keep up with the large number of KYC requests. Delays in KYC verification prevent users from migrating their PI to the mainnet. This creates uncertainty about the actual circulating supply of Pi once the mainnet launches. This uncertainty contributes to price volatility, as some users might sell their Pi out of concern over the delays. The Pi core team acknowledges the KYC challenges and is working on solutions. They are exploring ways to automate parts of the verification process to speed it up. However, until the KYC bottleneck is addressed effectively, it will continue to be a source of concern for the PI community and potentially impact the cryptocurrency's price. Section 6. PiNetwork's potential paths to recovery. Despite recent setbacks, PiNetwork still holds potential for recovery and long-term growth. Several factors could contribute to a resurgence in its price and overall success. Firstly, a successful open mainnet launch would be a significant milestone. It would demonstrate the team's ability to deliver on its promises and instill confidence in the project. The launch would also unlock various functionalities, potentially driving demand for Pi. Secondly, wider adoption in payment ecosystems is crucial. If Pi can integrate with businesses and services, allowing users to spend their Pi for real-world goods and services, its utility and value would increase. Thirdly, regulatory clarity would be beneficial. Favorable regulations surrounding cryptocurrencies could attract institutional investors who are currently hesitant due to uncertainty. Lastly, listings on major exchanges would provide greater liquidity and accessibility, attracting a broader investor base and potentially driving up demand. The path to recovery will require addressing the current challenges, communicating transparently with the community, and delivering on the project's roadmap. If PiNetwork can achieve these goals, it has the potential to regain its footing and fulfill its vision of becoming a widely used cryptocurrency. Section 7. The future of Pi regulation, adoption, and community. The future of PiNetwork is intertwined with the broader cryptocurrency landscape. Its success will depend on navigating regulatory challenges, achieving real-world adoption, and fostering a strong and active community. Regulation remains a significant factor. Governments worldwide are still defining their approach to cryptocurrencies. Clear and balanced regulations that foster innovation while protecting investors will be crucial for Pi's growth. Adoption is key to long-term success. Integrating Pi into existing payment systems, point-of-sale terminals, and online marketplaces will make it easier for users to spend their Pi. Real-world utility will drive demand and value. The Pi community is one of its strengths. Millions of users worldwide believe in the project's vision. Continued engagement, development of Pi-based applications, and active participation in the ecosystem will be vital for its future. PiNetwork faces both opportunities and challenges ahead. Its ability to adapt to the evolving regulatory landscape, demonstrate real-world use cases, and maintain a vibrant community will ultimately determine its success. Section 8. Real-world use cases, a glimpse into Pi's future. While PiNetwork is still in its development phase, there are emerging real-world use cases that offer a glimpse into its potential future. One example is the acceptance of Pi as payment by a U.S. real estate firm. This demonstrates the growing interest in using Pi for real-world transactions. Another area of development is the creation of Pi-based applications within the Pi browser. These applications, ranging from games to social networking platforms, showcase the potential for a thriving Pi-powered ecosystem. While these use cases are still in their early stages, they provide a tangible vision of how Pi could be integrated into our daily lives. As more businesses and developers embrace Pi, its utility and value are likely to increase. The Pi core team is actively encouraging the development of real-world use cases. They believe that widespread adoption is key to Pi's long-term success. They are providing resources and support to developers building on the Pi platform. Section 9. Expert predictions: what analysts say about PiNetwork. Expert opinions on PiNetwork's future vary, with some expressing optimism while others remain cautious. Kim H. Wong, a prominent cryptocurrency analyst, predicts potential growth for Pi, citing upcoming exchange listings, partnerships, and advancements within the Pi ecosystem. He believes that Pi has the potential to become a major player in the cryptocurrency space. However, other analysts advise caution. They point to the lack of a concrete launch date for the open mainnet and the slow progress on KYC verification as reasons for concern. They suggest that investors wait for more concrete developments before making any significant investments in Pi. Overall, expert opinions on PiNetwork are mixed. Its future success hinges on its ability to overcome current hurdles and deliver on its promises. Investors should carefully consider the risks and rewards before investing in Pi.